Hello, everyone. Welcome to the market update for Tuesday, February the 8th. As always, if you have any questions during the week, or if there are questions that I didn't get to in class to answer, you can always send those to Jerry at traderspro.com. Another quick announcement. I'm going to be out of town next week. I still plan to do the market update, the stock specific class. It'll be kind of a working vacation. Most of my vacations are kind of working vacations. But because it's a vacation, I'll probably just do the recording. So I can just kind of work it into whatever schedule we have for that day. And I'll try to get it done early. My plan is to get it done early in the morning, so that if you just have already scheduled this time of the day during your week to attend the class, you could just put on the recording at this time of the day and go through it. So I just wanted to let you know, because if you're going to be logging in at the start time, I mean, it's possible that I could be doing the recording at the same time as the class time. But if you log in and there's no class, that's probably what happened. I just did the recording. So just wanted to let you know that. That'll be for both classes, the Tuesday and Thursday class next week. All right, let's get started. Really, this would have been the best week to have gone on vacation, because there just really isn't anything going on, or at least the market is in a position right now, and it's been this way for the last week or so, where it's not showing a clear direction yet. There's still a chance we could retest the lows, the recent lows. We'll look at that when we look at the charts here in just a second. And I've been on the sidelines. I got out of my oil stocks yesterday, as they were looking like they could pull back a little bit. And they are pulling back a little bit today. Just felt like I wanted to just be in cash. If we do retest those lows, it really kind of put in a fear bottom. Definitely see me be a lot more aggressive. If we don't retest the lows and start moving up, you'll see me start adding some positions. I'm not going to sit out forever, but we are kind of still in that kind of critical phase where we can go either way. As far as the direction alerts, momentum is just kind of, again, still kind of in the middle here. There was a problem with the breadth indicator. Let's see if they fix that. No, they haven't fixed that yet. It's just not showing the data yet, but it's. I'm sure though. I noticed it when I was prepping for class that the data wasn't there, and sometimes that's when they can't fix something until they get alerted that something's wrong, and so you can see it's missing the slide bar there, but it's in the kind of the middle range as well, in this kind of hold range as well. So that not really telling us any sort of extreme as far as that's concerned. Sentiment is still really high. That hasn't really changed for a long time. Let's dive into some of the other indicators here to see if they're telling us anything. Buy sell ratios, we moved off of that extreme range, come a little bit closer together. They don't have to come all the way together. What you'd look for as far as a stronger bullish sign is that you'd like to see the buys move up and start outpacing the sells. Sells continue to move down, buys move up. We're just kind of sitting. We're getting closer together. But what you can notice here is that the buys have started to kind of flatten off a little bit. There's a lot more stocks going from sell to hold, and that's why the sell line keeps dropping. But there's not a lot of stocks right now going from hold to buy, not the same pace, and that's why this is kind of flattening out a little bit. And that's really what the charts are showing us too. When we look at the charts here in just a second, they're showing kind of the same thing. Sentiment, again, not in any extreme levels, just kind of sitting right in the middle there. What this does tell us, though, is that if the market does decide to take off, and the buyers start showing up, it looks like the market starts trending up again, that there could be a ways to go because we're not in any extreme level. So there could be a really nice long uptrend if that takes place. Again, the problem though is that if there's that chance we could retest the lows, we can come back down and retest the lows. It could go back to kind of the extreme. You could see the sentiment indicator come back to that green line again. And so again, I'm just not seeing anything where in the charts where you want to be aggressive just yet. Indexes still showing very oversold ratios here. Not much has changed. In fact, the only thing that is above 1 is the Dow Utilities, and that would make sense because the utility stocks are very defensive. When investors are worried about the economic conditions, are worried about the markets, they can go into bonds. They tend to go into bonds as a defensive measure. They also tend to go into utility stocks. Utility stocks are your power companies, your natural gas companies, where you pay your utility bill every month. Those stocks aren't going to be growing at double digits by any means. Maybe if more population moves into the area or something, they could grow a little bit, but they tend to, you have to pay your utility bill, so the money's always coming in, and they tend to pay very high dividends, and so you're not going to get growth, but you're going to get more of a safe return with those dividends, and so money will tend to pour into utility stocks. And so that's when you see utility stocks outperforming, and we'll see that here in a second when we look at sectors. That's not a good sign for the markets. It's not something you say, oh, we're in a real healthy market right now. No, it's a sign of fear. It's a sign of uncertainty, that these investors are going to the safe bet that they're not going to make very much money sitting in utility stocks. But the alternative is that they could be losing a lot of money if they're jumping into a lot of tech stocks or something like that, stocks that are declining right now. So just that's something to just pay attention to, or especially if you're brand new to trading. These are little things that if you're teaching a course, I wouldn't start out a course teaching people how to trade by saying knowing how to read utility stocks and defensive stocks and things like that. These are just little subtle things that you'll learn over time. The opposite of that would be when the small cap stocks, when the Russell 2000 is really outperforming, when chip stocks are really outperforming and doing well. That's a sign that there's a risk on, that those professional traders are taking on or willing to take on more risk. They feel comfortable taking on more risk to get that higher reward, and that's usually a stronger sign of a healthy trend, is when you see those type of stocks outperforming. So when computer and technology sector is near the top of the list of sectors, you're in a pretty strong bullish trend. All right, let's take a look at our charts here. And you can see what I'm talking about. So here's the big drop that we had last month. We rallied off of that right through here. And then last week, that'd be Thursday right here, we have this big drop. And, when you have a sharp drop like that, it usually can signal a reversal. You might be getting a trend reversal. It could also just be that, one thing I'm looking at, especially since we've kind of been moving sideways the last few trading sessions, we really haven't gone anywhere. Today we're up a little bit, although it's a little bit of a mixed market where the Dow is pretty much the one that's kind of leading the way. But you've got, and I don't mean by mixed market meaning that we have indexes that are down, but we've got, Dow's just the one that's kind of clearly has the highest percentage move today, but we've been kind of moving a little bit sideways through here. Now, again, you hear me say whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. that's where it's more likely to go after instead of moving sideways. And it could just be that, here was a sharp move off the bottom. This was a sharp move down for wave A. This kind of choppy behavior is wave B. Maybe we're setting up for one more move down for wave C, and then we're off and running. That's one possibility I'm still looking at and trying to see if that's the case. The other possibility is that, and this would be a kind of retesting these lows down here, is if this was just a bounce right here, this was your correction right here, because we did chop around a little bit right through here and then had a little bit of a burst up. You see that happen sometimes when within downtrends, you can get these sharp counter trend moves. In fact, a lot of times in downtrends, you're less likely to get real choppy behavior before going lower. You tend to get just a quick rally and then reverses and goes lower. You still kind of get that stair step. Here's kind of an example right here where you didn't really get a choppy rally, but it tried to rally and then rolled over real quick and dropped again. So it could be that was the correction of this move down, and then we're getting ready for a big move down. Now I'm not seeing that in like the VIX. In fact, yesterday we saw a situation where the market was down and the VIX was down. Now, anytime the VIX and the market are moving the same direction, you want to pay attention. You hear me say that all the time. In this case, what it tells me is that the market dropped yesterday and the VIX didn't show any concern with that drop. So the professional traders didn't see a need to hedge. They didn't see a need to get out of any trades. That they weren't worried about it at all. Now, that doesn't always mean they're right, but typically when that happens, I definitely don't want to short into a market like that, where professionals aren't showing any bit of concern. Because remember, they're the ones that are going to push the market down, and that's you always have to realize about when I talk about professional traders or the institutional traders. They're the ones that move the market. And whether they're right or wrong in how they're moving the market, it doesn't matter. It's because they're the ones that are going to move it. To give you an example, sometimes we see this happen with earning announcements. The earning announcement is terrible. The numbers look terrible, but yet the stock is rallying and keeps rallying. Well, it could be that institutional trader felt like that bad news was all the bad news that was coming out, and maybe he's listening to the conference call and they're talking about that this is probably the worst and that things should start to get better the next quarter and they should start to move up. Well, remember, traders are forward thinking, and so this big institutional trader might be considering that bad news to be the bottom. He's anticipating that stock turning around, and he's buying right now and getting in. Now, again, that doesn't mean that he's right. Maybe the stock rallies a little bit, and then before their next earning announcement, the company puts out a report that the forecast they made, or they're not going to hit the forecast they made. The news is still bad, and the stock could roll over again and keep going down. But the bottom line is that those big institutional traders are the ones that are moving the market, and so as much as possible, we want to be following them. And if we do disagree with what we're seeing, with what the professionals are doing, then that other step could be just to sit out. If we're not quite sure why, in this case is a good example, why aren't they showing any fear at all in that little drop yesterday? And there's still that possibility, we're still at a spot right here, at least as far as I can see, where we could, any sort of bad news that comes out could trigger another sell-off. Maybe, Russia finally, moving into Ukraine could freak the market out, and it could drop very, very quickly there. So in other words, I don't understand why the market moved down, the VIX moved down. Doesn't mean I'm going to go ahead. I'm not going to go ahead and short the market right here because it's not showing. I don't see the professional traders being behind me on that. They're not showing the fear that they would show of a market sell-off. But it doesn't necessarily mean I'm going to go run in a buy right here either, just because I'm seeing that. I could just make the decision just to sit on the sidelines until things get a little bit clearer. This is probably the hardest part for most traders, even traders who've been trading for a while, to kind of master is patience. And we hear it all the time. People say, well, the key to being a good trader is you got to be patient. You got to be patient. And we all kind of seem to understand that, but what does that mean? Well, it means in situations like this, you're not trying to guess, and I think part of what makes people impatient is they try to convince themselves that they know something everyone else doesn't. I know for sure the market's going to go up. This is, I have no doubt, and they start looking for reasons to back that up. And you can always find, if you develop a strong enough bias, you can always find reasons to back up that bias. That's what's so dangerous sometimes, is that you can always find some analyst out there that agrees with you, because there's all day long, there are people that are talking about why the market's going to go up, why the market's going to go down, why Apple's going to go higher, why Apple's going to go lower. You can always find someone or something you can, I just showed you here where I could make the argument that this is an ABC pattern. It maybe has one more move down, then takes off. This could be just a brief correction right here and could drop. You could always find data that could suggest, that could back up your bias. So that's why I really don't try to. I really guard myself from developing strong expectations or biases. I try to, as much as possible, just focus on what's showing me right now. What's the trend direction right now? Because when you really lock into those biases, it's hard to see the warning signs. And one way to do that is to take the other side. Always don't look for reasons why the market should go higher. Or if it does look like it should go higher and the chart is looking like it should go higher, take a few minutes to say, okay, let's approach it from a different angle. What if I thought the market was going down? What evidence is there that the market could be going down? And if you kind of force yourself to look at things, excuse me, from the opposite point of view, then it can either, sometimes you'll find that maybe your bearish argument is stronger than your bullish argument, and it'll force you to change your perspective a little bit. Or you'll just find that you can't find enough evidence that the market's going to drop, and that really backs up your bullish argument and gives you a little more confidence getting into those trades that you're getting into. So, don't ever think that questioning, because we come from a society sometimes, you hear this all the times in motivational speakers and things like that, and goal setting. They tell you to when you have your goal, you lock into that goal, you block out everything else, you block out all the negative. You don't want to listen to anything negative. You only focus on the positive and accomplishing that goal. Don't let anything deteriorate that drive. And that's good advice, and that works great for goal setting. But I'll tell you what, that'll kill you in trading if you block out all the negative and only look at the positive. Because in the case I'm talking about right now, if I convince myself the market's going to go up, and I block out anything that would tell me it's going to go down, you see what the problem is, right? I'm going to miss all the warning signs ahead of time that were telling me, this thing is not going to go up, it's going to go down, and you really get crushed. So it's really counterintuitive sometimes, that you have to kind of do the opposite of what you would normally do in other aspects of your life. And this is one of those. It's okay to question your trade or question your analysis, and you should. I think it'll produce better results. And this gets back to what I keep talking about each week, which is our job is not to predict. Our job is to analyze probabilities. We're looking at the probabilities. So without kind of trying not to rattle on too long, but we don't have a real strong probability of a direction here. And so this is where you need to be patient. You need to recognize that. Let's just wait. There's plenty of money to be made if this thing starts to drop or starts to take off. Although since we're mostly just going long in our trades, we're probably not going to do anything if we drop. We're going to sell on the sidelines if we drop and get ready for the next rally there. But so that's kind of what's going on with the S&P. The other charts are not much different. The Dow, like I said, is having a stronger move. It's up over 1% today on its move, but again, it's still, could this just be a wave? Is this wave A? This a wave B bounce? Could we have wave C? Could this just keep going higher? I mean, if this breaks out to a higher high, it's possible that that this could be wave A, wave B, wave C of a bearish ABC pattern. Then you retest the lows, so you get maybe a short-lived rally there that rolls over. And usually you don't see this kind of indecision during earnings season. Usually you'll see a little bit of stronger direction. But it would make sense if you take a look at all the earnings that have come out. There's been a lot of mixed earnings reports, with Apple's being a strong earnings report, Amazon being pretty strong. You've got Facebook and Netflix, which have been terrible. And, obviously, if you start seeing that, some companies are doing well, some aren't, it creates a little bit of that indecision for the traders out there. They're not as confident about economic conditions. Qs, again, they're still real flat sideways. And again, what worries me is that we had that initial drop last Thursday. So you had the drop, and now we're just kind of moving sideways. It really has a feel like we have another move down. There's a Russell. Russell's up today. Oh, actually, it's up a bigger percentage, 1.5%. And it also, what's a little bit unique about the Russell is that it did move below that was that January 10th? Is that where that low was? That first reversal? Oh no, that's I thought it was January. Maybe that was January 10th. Or no, that's the January 10th low right there. And then we went down. This is the 24th. Oh, this year's flying so far. We're going to be through February before we can blink, which is good. These winter months, they tend to drag on sometimes a little bit. Tend to be a little bit longer, it seems. But we did go a little bit lower than that January 24th low. We went a little bit lower on that one. That's where I was really worried that we were going to things are going to really drop. Managed to rebound off of that. So, this is maybe looking a little bit more like it could be that maybe wave A, wave B, wave C. It wouldn't even be retracing that much of that drop if it were to rally a little bit there and then see if it rolls over. So what I'd be looking for too in the next few days is do we maybe move higher, but then we get a bearish reversal candle. Maybe we gap up one day and we gap up and then end up dropping, closing lower than where we opened, a little bit of red candle, some sort of bearish reversal that might be signaling a drop, and especially if there's higher volume on it and the VIX spiking up, or actually the VIX might be up a little bit, or it could be down. You could have a situation the market is still considered up because it gapped up and it's still higher than the day before. But the VIX is starting to move up. That could show a little bit of concern if that were to take place there. All right, let's move on. Bonds are in a clear downtrend. We talked about this last update. We had impulsive down. Again, here's where it kind of moved sideways and choppy through here. It dropped again, moved choppy through here, and then it dropped lower. We are getting a little bit of a bullish reversal candle today. We'll see if maybe we start to see a little bit of a rally in bonds. Maybe those bond yields start dropping a little bit. From an Elliott wave standpoint, it would make sense we get a little bit of a bounce in bonds. Typically when you're in an impulsive wave or a trending wave, you'll tend to move in 5 waves. This is wave 1. This kind of corrective sideways trend or move is wave 2. This would be wave 3. The sideways move would be wave 4, and then this final move down would be wave 5. If that's a true Elliott wave pattern there, then we're probably due for, in this case, a bounce or a rally. So in an uptrend, you'd have wave 1, 2, 3, 4, 5, and then you'd go into a larger ABC correction. And again, these are very general. I've got a training on this. I reference it many times. If you go into the YouTube channel, go to YouTube, type in Traders Pro, and you'll see a bunch of recordings, trainings. I have a few recordings on Elliott wave analysis. You'd get like this ABC correction, and then you'd start 5 waves again, 1, 2, 3, 4, 5, and that pattern kind of repeats itself. Well, it can do so in the downward trend as well. You get 5 waves down, meaning that maybe we get an ABC rally back up before maybe we see bonds start to head lower again. Real quickly, let's take a look at a longer-term chart. Now, I don't always go to the longer-term charts in class, but that is something you want to do on a regular basis, is check bigger, zoom out a little bit, look at the larger context. Sometimes you lose sight when you're looking too close at these charts. You lose sight of significant patterns that are developing or forming, and I don't see anything here. Well, if you're looking at this as being a big drop, this is being maybe wave A, wave B, wave C, kind of a bearish ABC pattern right here. And then we're starting a larger decline. Maybe this is wave 1, 2, 3, 4, 5. Maybe we get a little bit of a bounce. We head lower again. Bottom line is that we're in a downtrend in bonds, and what I'll be looking at over the next few days is, like I said, we have a little bit of actually that's changed a little bit. Now it's a little bit more of an indecision candle, and that's just the thing about candles is that's why your best analysis on a lot of these charts is after the market closes, when the candles are. That's what they show you what they did that day. You see me this happen a lot in class where I'll talk about something, and then by the end of the class, that whole candle has changed. It looks different. I think we even had this happen on Thursday where we were talking. I can't remember what we were talking about, but it almost completely changed by the time we finished class. But if it does close near the highs of the day, that would be kind of a bullish reversal candle, and you'd see if that leads to a little bit of a bounce. The bottom line too, with all this analysis I just showed you, is that you also an extreme oversold. You're really showing you're due for a bounce. So from an Elliott wave perspective, it looks like it could bounce. From a trend perspective, it looks like it could bounce. From momentum perspective, it looks like it could bounce. Doesn't mean it's going to do it immediately, but candlestick formation is showing a little bit of a bullish reversal day. So that would be my expectation. So the bottom line is, do you have to go trade that? Not necessarily, but you definitely wouldn't want to be shorting bonds right here in this kind of environment, because it probably doesn't have as much downside potential as it is upside risk there if it starts to rally. Gold, again, I haven't really spent a lot of time on gold. We're just kind of still stuck in the sideways range. Really, really clearly break out of this range. Too many whipsaws. Too many times where we said, boy, it looks like gold's trending up or trending down, that something reverses. And so I don't like to spend a lot of time there. Oil has been in a strong uptrend. Now, I did get out, and I got out ahead of this drop today. Now, what was some of the reasons I got out? Well, one of the bullish arguments I still think when Russia does invade Ukraine, which I think is inevitable, it's going to cause oil prices to go up. I mean, that's the whole reason for them to do it, is that there's so much of their economy is based on energy. They basically are the main supplier of natural gas to Europe. And so I just don't see how those prices don't at least spike initially. I don't see how that doesn't happen. And I don't see any reasons why Russia wouldn't provoke that in order to benefit from it. It benefits them. It's in their own self-interest for those oil prices to go up. That's why I think it's kind of inevitable that it's going to happen. But when is a big issue. How long could this be prolonged? And one of the things that concerned me a little bit was when you zoom out a little bit on USO. This is why it's a good idea to look at the longer term charts from time to time. If you connect the tops, especially right into here, if you connect the tops, I mean, I'm not drawing a straight line, but if you can draw a straight line, it's almost perfect, where we're right at the top of that range. And so I saw it, and we're at the top of the range, and then I'm seeing a little bit of a bearish indecision day, kind of a little bit of a doji yesterday. So you came off the highs. You had a nice move up on Friday, but then you came off the highs of the day, which is not a good sign, especially in context there of that trend line. You're seeing it sell off a little bit, and then you have an indecision day right here. I just decided just to go ahead and get out. I had about 4 of those oil stocks, and I just got out of them. Now I'm back to cash in the portfolio there, and we dropped. So could it be that are we in a bigger drop? Or in a bigger correction in oil? I don't know. But like I said, it's hard for me to think that we won't have that one more burst higher. But that's the danger right here, is that it could go into a larger correction while it's waiting for that to happen. Maybe it comes down and retests the breakout here. Maybe it just turns right around and goes higher again. I can always jump back in those stocks again. I'll keep an eye on them. So that trend is still considered up. I don't see it broken yet. So and again, in a normal circumstance, I would, I don't know for sure if there's going to be a bigger correction in oil. I usually, as a trend trader, I'm trying not to, predict or guess. But with so many other parts of the market looking bad, like I said, I really don't want to be in anything right now. The only reason why I was going into those oil stocks was because they were the only thing that was continuing to trend up. But when I'm starting to see a little bit of weakness there, I go back to not wanting to be in anything. So that's kind of what I concluded there. There's a question here: is today a little bit of a bullish hammer? It depends on how we close, but the problem with something quick like that is it's not at a major bottom. It dropped from a high. These are not very reliable if it's a one-day move. You'd like to see at least some drop. Here it dropped a little bit before forming a hammer. This was the drop today, and it's forming a hammer. It's a little bit less reliable in that context. The most reliable is when you get a really defined drop and then you get that hammer. Because remember, a hammer at the top, if you go up and then you get what looks like a hammer, that's actually a bearish price action. And now this isn't at a top, but it's very near a top. So, yeah, maybe it does come right back up again. That's definitely a possibility, but it's not a real strong price action, bullish price action in this context here. I would kind of consider that a little bit more of an indecision type price action in the context, kind of along the lines of a doji. Anyway, that's just using my experience. You get that kind of when it's on the hammers forming on the day it drops. It's not usually a very strong something I really want to buy into. And this gets back to about context. Could it still be a bullish price action? You get maybe it opens higher the next day, but then it slides, it starts dropping because it wasn't very strong. So could it still lead to a little bit of a rally for a real short-term overnight bounce or something? Yeah, I mean, there's a lot of this stuff that it can depend on the context in which you're looking at. You're looking very short-term. You're looking longer-term. I run into this a lot with other traders that are with the company. They'll recommend they're in an investment that they're going to be in for 6 months. They think that stock should go up in 6 months. I think it's going to drop because of a bearish candle. I think it's going to drop over the next 2 days. I recommend a bearish trade. They're recommending a bullish trade, and it looks like we're in conflict, when actually we're just trading different time frames. We're looking at something in a different perspective. And we're both probably right. It probably drops a little bit the next day, and then over 6 months, it could rally up to those levels that person's expecting over the next 6 months. So always remember that too because I see this happen a lot, particularly on CNBC. If you watch CNBC a lot, you watch those halftime report or fast money show at the end of the market day. Sometimes you'll hear these guys. It looks like they're conflicted, or they're disagreeing, and sometimes you have to know the trading style of some of these people to understand that they're both probably right. They're just arguing different time frames, and they don't always point that out, and so sometimes you have to kind of, over time, you kind of get a feel for what type of trader they are. Are they short term? Are they an options trader versus a long-term investor, portfolio manager? They're going to have different perspectives. It's like, well, right now, I mean, you don't really want to be aggressively, buying risk stocks when rates are rising and the Fed's going to be raising interest rates. So as an investor, you tend to be more defensive. You're going to get into utilities. You're going to get into more of the defensive type stocks. But as a trader, you might see that Netflix could rally for 3 or 4 days or something like that, and you're very bullish on Netflix for the next week or something like that. You can have the totally different perspectives on depending on your trading time frame. All right, the dollar still continues to look like it's in a trend reversal to the downside. We pointed this out a number of times. Had your kind of your stair step up right through here, higher highs, higher lows. Then you have this impulsive move down. It looks like we're getting a little bit of a more of a sideways kind of corrective type move, which should, although you can still rally a little bit off of that, this should lead to another drop in the dollar. At least that's what I would anticipate based on that behavior, that it looks like the dollar's reversing from an uptrend into a downtrend. We'll see if that continues, but that's the way it's acting right now. There's the VIX. This is what I was trying to show or talk about earlier, where the market was down yesterday and the VIX was down a little bit. So it was showing really not a lot of concern there. Market's up. You expect the VIX to be down when the market's up, but you're just seeing the VIX continues to move lower. Just not seeing a lot of fear or concern right in this area here. And again, that can change very quickly. But it definitely would cause me not to want to jump into too many bearish trades in that type of environment where you just, it could be. There's a saying that in Wall Street, you never want to short you never want to short a boring market or a quiet market, or when that VIX is not spiking or moving your direction. You don't want to be shorting heavily in those types of conditions, because even though the market can look a little bit weak, it doesn't mean that there's a lot of sellers there. It could just be just a short-term lack of buyers, and they could just suddenly show up and push things higher. Well, the quote is, you never want to short a dull market, is the official kind of quote there. And that's kind of, we have a little bit of a dull market right now. Chip stocks, they're trying to rally today, but they're fading a little bit. Not a lot of strength in the chip sector there. You want to compare the chips to the NASDAQ 100. You'd like to see the chips really start outperforming if you're really confident, if you're seeing a real confident bullish trend. Transports is another one we'll look at. Again, they're fading a little bit too after rallying pretty strong earlier. Again, we have another hour in the market before it closes, an hour and 15 minutes. That could change. Maybe we rally close to the highs of the day. We have seen the market rally a lot into the close recently. And so, all these candles could look a little bit different if we get that same dynamic. But as of right now, that's showing a little bit of weakness as it's backing off the highs of the day. Just showing that indecision I've been talking about all class. Bitcoin's actually had a pretty strong couple days, and the volume has been really good. I don't usually have the volume bars up because it kind of covers the chart sometimes, but very huge spike in volume on this low right here. It kind of stabilized and then had another move up on high volume. A little bit of a bearish inside day today. And again, we'll have to see how that looks at the close. Is it possible that this is just a bearish ABC pattern and Bitcoin's still heading lower? That's definitely possible, and that's something we'll look at. With the volume that was coming in, though, right at these lows, it makes me wonder if there's at least a little bit of a short-term bottom coming in there. Not to mention, a lot of people are really bearish on Bitcoin right now, and so from a contrarian point of view, when nobody really wants to buy Bitcoin or is really nervous about buying Bitcoin, that could be a sign that there's a bottom or you're out near a bottom. But we'll have to keep an eye on that little bearish inside day right there, see how that closes, and we'll find out if this is a start of a bigger move up, or this is that bearish ABC pattern and we start heading lower. All right. We've had about 2 or 3 of these updates in a row where there's not much to really get excited about. I will go over a couple of stocks so you can consider from the list. And this is what I was showing you before. I was going to show you, or I talked about earlier. So this is ranking the top sectors. So the objective is we like to start at the top and work our way down. You look at the strongest sectors, and then you find the strongest stocks within those sectors. You're more than welcome to jump into utilities and see if there's any utility stocks you want to buy. I don't tend to get into well, it depends. If you're just trying to capture a big dividend, it's a good idea to have a few utility stocks. You can almost just kind of, you don't even have to watch them every day. They're not going to typically go out of business or anything, and they're going to usually give you a nice dividend every quarter. But if you're wondering why I'm not recommending a lot of utility stocks, it's just that they're not, as a stock, they're not really going to go anywhere. So even if they're showing a near-term uptrend, they're not something that you're going to tend to want to expect big returns on the stock over a long period of time as far as the trend. If we move into oil under the hold, I like this CLMT 99 strength rank. Let's switch this to signals here. We've got this kind of a little bowl-shaped move right here. It retested the highs up there, and then it's kind of looks like it's forming another little bit of a bowl-shaped move. Again, remember that oil is showing a little bit of weakness on the chart we just looked at in the USO, but we're waiting for this to go back to a buy signal as a confirmation anyway. But that pattern there looks pretty bullish. I like the higher low right here. It looks like a higher low, and I like those little bowl-shaped patterns. They tend to be pretty bullish. Under finance, like a couple under finance here. CPSS 98 strength rank. Kind of a similar pattern here, kind of this bowl-shaped move. Couldn't break out, pull back a little bit, but it has a nice little move back up again today, going back to a buy signal. Now, if you're looking at all the analysis I just did and said, I don't really want to jump into anything either just yet, even though it's going back to a buy signal, you could wait for a breakout. If it breaks out, and this is why, patience, we talk about patience. Obviously, if you get in right here and the market starts rallying and this breaks out, you're going to make more money because you got in before the breakout and make a little bit more money. But, this is part of how I weigh everything. Could I wait for a little bit of a stronger confirmation that the market's moving higher? And getting that, the stock could then break out, and I wait for the breakout. The rule of thumb on these breakout moves, when you have these kind of bowl-shaped moves and you break out, is that when you break out, these stocks, not always, but a high percentage of the time, will tend to move up about the same distance as the top of the bowl to the bottom of the bowl. So you could take that distance, project that upward, and if you break out, there's a pretty high probability it's at least going to get to that level. Again, it doesn't always do that. We are still talking about probabilities, but that's all we can do anyway, is base it on probabilities. But that's still a pretty good move and a very high probability move. So, in this context here, I might wait for that extra confirmation. And with it, you'd probably get a stronger market direction at that same time, and that could give you a little more confidence in getting the move. So that's my 2 cents worth in that situation there. Another one under finance is ALTC. And you had this big drop right here, had this initial move up, and then it's just kind of been choppy through here. But even in the choppiness, you've got, it went to a lower low right here, lower high, and then it looks like you put in a higher low. So real subtle possible trend reversal. It looks like you're clearing a lot of resistance today. Again, we'll have to see how that closes. Maybe it fades into the close a little bit, but if it closes where it's at right now, you're kind of breaking out above this to a higher high, basically. You could wait for it to break out of this range as well to give you a little bit more confirmation. You're waiting for at least a buy signal anyway, so that should clear you above this range here if it does. That's looking like it's showing a real subtle, so slightly higher low right there too, showing that it could be forming the space and could be starting to trend up again. And then one more in the retail sector. HBP right here, 96 strength rank. Looks like this could be coming out of an ABC correction right here. A nice move up, dropped a little bit right here, but has a little bit of a bullish day right here. Let's see if that can start moving up. If it goes back to a buy signal, and if it does start to go up from here, you got a little bit of an inverse head and shoulders pattern there that could be developing as well. So that's one you could probably add to your watch list. Yeah, as far as the portfolio, I don't have anything in portfolio right now. 100% cash. Not going to add anything today. I am going to boot a few stocks out of the watch list just to. I'll add these stocks that I just went over today. I'll add them to the watch list. I'll probably do that after class here. But I wanted to drop TRNS right here. This thing has gotten crushed. I think it had a bad earnings report, but we were waiting to kind of see if this was forming a base to go higher, and it just collapsed. And I don't see a reason to hang on to that one, so let's get rid of it. I'm going to go ahead and get rid of this ERJ. It was a defense, aerospace defense stock. This doesn't look real great, so probably get rid of a lot of stocks in this watch list and kind of start all over again. But if we do start to move up, I'd like to have something to go look at to maybe find some opportunities. So let's get rid of ERJ here. Tesla, I've had Tesla in here, but you know what I noticed on a couple of these, Tesla and NFC, so both these right here, is their strength rank is way down. I mean, Tesla, it was up there close. It was like at an 80. Sorry, my throat's just about had it for today. But we pull up the chart here. It wasn't quite a 90 strength rank, but it was in like the high 80s right into here. And had this move down, and the strength rank is now down to 58. I just don't. You want to be. I like the company. I like the name. If there's ever a time I want to get into the electric vehicle stocks, this is the one I'd want to be in. But that strength rank is way too low. And then also the railroad. We'll go to watch list here. Let's go ahead and get rid of Tesla. But the same thing, Norfolk Southern, the railroad stock. This is another one of those that had a good strength rank when it was up in here. Now I kept it in here because it looked like maybe this was a larger ABC, and it could start moving back up again. But yeah, that's a 61 strength rank. That's too low. No reason to be watching this anymore. if it does start trending again, the trend will look good, and it'll move, the strength rank will move up, and we'll see it again somewhere down the line if it looks good again. I don't want to have a whole bunch of low strength rank stocks in here. I might get rid of a few others too because of that. Let's go ahead and get rid of those. Now, some have a little bit lower strength rank just because of the sector they're in. Doesn't usually produce high strength ranks. Example would be construction. If you go into the hold section here, the highest strength rank is a 97, and then you only have about 5 or 6 stocks in the 90s, and then immediately you're moving into the 80s. So I don't mind on some of these where I know the sector doesn't typically produce high strength ranks. I don't mind moving down a little bit, but getting into the 60s, that's probably a little bit too low. I still don't like to get, even on these, I don't like to usually get below 80. But just remember that. And you'll notice it as you go, if you go through these on a regular basis, you'll start to see what sectors can tend to have lower strength ranks. Industrial products, or maybe it's basic materials, might be basic materials, has a tendency to have lower strength. It's going to take forever to load that here. Yeah. Anyway, conglomerates typically will have lower strength ranks. See, look at that. Went from 98 at the top down to 79. Doesn't mean it doesn't mean I can't trade them. But you'll see it. Like I said, you go through these, you'll start to get a feel for that, as you'll see which sectors tend to have a little bit lower strength ranks. All right, that's all I have. Again, if you joined a little bit late, just a reminder, I'm going to be on kind of a working vacation next week, and my plan is to do the classes, both the Tuesday and Thursday classes, just the recording of it. I'll try to do it in the morning. I may even do it like late the night before or something if I got something planned early in the morning. But it'll be through a recording. So just go to the YouTube channel, check it throughout the day, and you'll see when that recording is posted. If I do it at night, it's not going to get posted because usually the office will post it. So it would be sometime during the day when that would get posted. But I'll try to have it so, like I said, if you normally are viewing the live class, that it'll be the recording will be available during this time. I'll try to make sure it can be available during this time so you can just go watch it. But anyway, that's the plan. So if you show up for the live class and I'm not here next week, then just go right to the YouTube channel so you can view the recording. All right, thanks everyone. Have a great week. We'll see you on Thursday for the stock specific class. Bye now.